Hey, welcome. I'm Dana Pollard, a real estate agent in the Dallas-Fort Worth Metroplex, and today I have something special. I'm here with Jonathan Alexander. He is a loan officer with First United Mortgage Group.
Hello.
And what I brought him here for is to share a little bit about what we call the doctor loan or the physician's loan. And I just wanted to pick his brain because he is an expert in loans, right? Home mortgages. And so I just had some questions that I wanted to share with you. If you are a doctor, a dentist, we'll maybe share a little bit about what kind of doctors this is for.
It's good for the ones that would consider themselves physicians and then also dentists. The great thing about this loan is that it qualifies for residence, fellowship, if you're in fellowship, and then also if you're outside and you're in practice at that point, it's good for you too. So there's lots of different people that this loan option is open to. So as you know, any doctor's invested a lot of time and a lot of money and a lot of energy into getting their degree. And so with that, it's time for a bank to invest in them and their future with their family. So what we do at First United is we have a great physician program, a doctor program that helps push them outside of school and outside of that fellowship and residency program to really take the next step financially and financial freedom, and then also just ensure stability for their family while they're transitioning out of that crazy time of life. So with this loan, the great thing I would say, one of the biggest perks that we hear about is that, or one of the challenges I would say is that we don't have the money to do this. We don't have the money to buy a house. Well, the good news is it's 0% down. So you can do 0% down up to $750,000, which will buy quite a bit of a house here in DFW.
That's a real big deal, yeah. So just highlighting back where he said, you know, you've invested in yourself. I've talked to some doctors that are like, oh my gosh, for 10 years plus, you're investing in yourself, and it's time. Like, it's time to settle down, get a home. And that's a big deal. So real quick, you just mentioned zero down. So the doctor loan is what we're going to call it.
Right.
You can put zero down, which is a big deal.
Yeah, if you want to avoid PMI on a conventional loan, you do that with putting down 20%. You know, if you did an option, so just a scenario, just a generic scenario, if you put 0% down as a physician on a $500,000 home, you're looking at a payment of probably, based on current rates, you're looking at about $2,350.
Okay.
Well, if you come up with $50,000 down, so you're putting 10% down, which is a great savings, but you could potentially use that money elsewhere. You're only going to save about $200 on your monthly mortgage payment.
Okay, that's a really big deal.
That's a huge difference, absolutely.
Okay. Tell me maybe a little more about the 5% down.
Yeah, so you can do zero down up to $750.
Okay.
So no necessary requirements for down payment in that. Now, if you want to go above $750, if you're looking to go up to 1.5, say for example, 1.5 million, you're looking at 5% down.
Okay.
Still amazing. Most banks are going to require you to put 20% probably down in that price range.
Absolutely.
So this is a great benefit for a physician or doctor.
Yeah, it really is. All right, Jonathan, so tell us maybe a little bit more about PMI, maybe simplify what PMI is and how it affects this loan.
Yeah, so PMI is known for private mortgage insurance. So it's an insurance that insures the lender against any potential defaults. So it's a little risky on most loans if you don't put 20% down. So most lenders require PMI. However, on this doctor loan, we do not have PMI on it. So for an example, if you had $1 million loan and you had $1 million mortgage and you had PMI on the loan, you're probably looking somewhere in the range of $200 to $350 a month. And so that's not cheap. So for our doctors and physicians that they can save on the PMI, they can save $250 or $300. I mean, we're talking thousands a year. So it's a big difference.
So I do wonder, is it, and this is just off the top of my head, is it almost a wash to say put less money down but you have no PMI? Is it almost a wash? You're too numbers driven to go yes.
Let me get my calculator. So,
right.
No, but that's a good question. So for an example, if you saved up $50,000, not everybody, especially coming out of residency or fellowship or school of whatever nature, 50,000 isn't usually just lying around. So wasn't for me at least. But nonetheless, so if you take time to save that, you could have missed out on great rates. You could have missed out on a big difference in what your payment's going to be because the market could change. And house values, quite frankly, are going up so fast that, even if it's a 5%, that's 5% you missed out on in 1 year of an adjustment.
That's a really good point.
So,
all right, so that brings me to the next question, because many doctors, physicians coming right out of school, many of you have a lot of debt that you're concerned about. So how does the debt from their student loans affect the doctor loan?
Great question. So the good news is if they're deferred for another 12 months from the time you close on your new home, if they're deferred to 12 months afterwards, we don't have to count that payment at all against your debt ratios. So that frees up quite a bit. Now, if they're under 12 months, there is a calculation that we use to figure the minimum payment, but it's negligible compared to what the future may be for those payments.
Okay.
Depending on the program.
So talking about payments and debt to income ratio, what are the income requirements for this type of loan?
Yeah, so we have a certain calculation for debt to income ratio overall. So typically we can go up to 43% of total gross income. And what's unique about this loan with us specifically is that a lot of physicians and doctors are getting out of school and they don't really have a history of work, obviously. They've been working in their field, but not in the sense that they're out of residency or fellowship or schooling itself. So with that, we're very flexible. So whether you have an employment contract, you can use that. Even if you're going to go self-employed, like a 1099, a lot of times companies are doing that now with our doctors. They're putting them 1099 to start off. As long as you have a 3-month history doing that, you can get a loan, as opposed to the general rule.
That's a big deal.
Yeah, the general rule is 2 years because you're expected self-employed.
3 months is amazing.
Yeah.
I need to go back and get my doctorate.
Lots of school, lots of time.
Yes. All right, so Jonathan, what kind of credit score requirements?
It's a great question. So every loan, and depending on the situation, is different, but I would say just kind of as a general rule of thumb, it's going to be somewhere from 680 to 720. So it doesn't have to be an 800 credit score. Most people think it has to be an 800 credit score, and so that's not the case, even with 0 down.
Okay. And are there any reserve requirements?
There are reserve requirements. So the good news about the reserve requirements is it's small. So it can be anywhere from 4 to 6 months. And what reserves are is basically your, imagine your payment. So if your payment's $3,000, then you have to have 4 months of the $3,000 saved up. So $12,000, right? So that's one example of reserves. Now the good news about the reserves is that it doesn't have to be in a checking or savings account. It can be in a retirement account of some sort.
Okay.
Or it can be a gift from a family member.
Okay.
So that can be utilized, absolutely.
Okay, great. All right, so all in all, tell us just overall what this doctor loan benefits.
Yeah, so the benefits certainly are the no to low down, absolutely. So the down payment requirement being so friendly to a doctor. And then also the no PMI, that saves quite a bit a month. So that's certainly a great benefit. And lastly, just who it's for. It's for people that have spent a lot of time training in their field. They're going to give back to the community in a positive way, and that certainly take their job very seriously. So we want to be there to represent them on their biggest purchase of their life. So we'd love to help.
All right. Thanks so much, Jonathan.
Yeah.
I'm going to put in the link below his contact information. They can go to your website and apply for this loan online. Yes.
Absolutely.
You can also call him, of course. But I'll put his contact information below. He can give you even more details, answer all of your questions, and then when you're ready to purchase, give me a call. All right, have a great day. Thank you so much for watching.
Thank you.
Hey, thank you so much for watching my YouTube channel. Hey, while you're here, would you click the subscribe button and then the little bell for notifications? I do release new videos weekly, at least once a week. And then you can click on one of these.